What's up, traders? In this video, I'll be performing a trade recap of this long trade I managed to get involved in on USD JPY. So stay tuned. Now, I got triggered into this trade on Thursday, the 24th of July, 2025, during the Asian session as price action came in to interact with this 1 hour demand zone. And then my full position was taken out in profit in this area here on Wednesday, the 30th of July, also during the Asian session. In this video, I'm going to be breaking down how I managed to spot this opportunity, how I got involved in the trade, and how I managed the trade after getting triggered in. Now, in order to do this, I'm going to bring on the bar replay tool here on TradingView, and I'm going to pull price action back to Wednesday, the 23rd of July, 2025, an hour or so after the open of the New York session. And then I want to drop all the way out to the daily time frame in order to give you guys a full top-down view of how I was able to establish my directional bias for the trading day and how that directional bias aided me in identifying this opportunity. Now, on the daily time frame, we can see that price action is trading within this large bearish daily external range. My last external breaker structure is a bearish one in here. We can see that we did have a really nice deep pullback into our premium priced area, which came in to interact with this daily supply zone. And after that daily supply zone was mitigated, we saw a really nice bearish push to the downside, which essentially saw our internal structure shift from a bearish market state to a bullish market state after the violation of this low. And when our daily internal structure shifted from bullish to bearish, that obviously signaled the end of our daily pullback phase and now the potential start of our daily continuation phase. The overall objective for this bearish daily external range was obviously a violation of our daily week low down here. And focusing in on more recent price action on Wednesday, the 23rd of July, 2025, we can see the price action was trading within this bearish daily internal range. We're going to have a better look at this when we drop down to our 4-hour time frame. But effectively what we had is we had an internal pullback, which came in and gave us a very slight tap mitigation of daily supply. This very slight tap mitigation of daily supply did generate an initial bearish reaction, but as we'll see in a minute when we drop down to our lower time frames, there was potential for seeing a slightly deeper mitigation of that daily supply zone. And this is what really formed the basis of my trade, because if we now drop down to the 4-hour time frame, which is the time frame that I get my directional bias from for a particular trading day, what we can see is that daily internal bearish range denoted as a 4-hour bearish external range, with my last bearish 4-hour external breaker structure located in here. Now, because of the nature of price delivery during my 4-hour impulsive phase, in particular during this period here, and this larger period in here, this is what led to the formation of fairly wide internal ranges. Just very quickly, we can see that my internal structure was trading bearish here as it was facilitating my 4-hour impulsive phase. And then because of the nature of price delivery in here, it led to the formation of this very wide 4-hour internal range. Now that internal range broke down after we saw a violation of that internal strong high. That is what allowed us to confirm the 4-hour pullback and establish this new bearish 4-hour external range. And because of the fact that I now identified this as my new bullish 4-hour internal breaker structure, it now meant that I subsequently had a very large bullish 4-hour internal range that looked like this, with all of this price action in here coming together to help establish initially that 4-hour internal impulsive phase and then my 4-hour internal pullback. So as much as we saw price action retrace fairly deep into this bearish 4-hour external range, the actual confirmation of the 4-hour pullback phase and the establishment of the 4-hour external range was only really achieved once my internal structure shifted bullish here. Obviously, we had the opportunity as well to utilize the 40 to 50% retracement rule to establish that range. However, coming back to more relevant price action as it relates to the actual trade that I took, we can see that price action on Wednesday, the 23rd of July, was trading within this large bullish 4-hour internal range, which was still technically facilitating the 4-hour pullback phase. As much as from a zoomed out overall view, price action was trading sideways for all intents and purposes during this period, it was technically still facilitating that 4-hour pullback. After that new bullish 4-hour internal breakout structure, we saw a very slight tap mitigation of that daily supply zone, which we had seen on the daily time frame, and this generated a bearish reaction. Now remember, at this current moment in time, our 4-hour internal is bullish, facilitating the 4-hour pullback. Because of the very slight tap mitigation of daily supply, I was anticipating another push to the upside to potentially help facilitate a mitigation of this daily supply zone. And so effectively what I was looking at, I was looking to take a counter 4-hour trend buy trade to trade in line with the 4-hour pullback phase, hoping to see a deeper mitigation of this daily supply. I want to stress as well that at this current moment in time, because of the fact that we had already seen a pullback into our premium pricing, taking a counter trend sell like this had significantly increased risk attached to it because of the fact that we had already seen a very slight tap mitigation of this well-priced daily supply zone, and price action could very easily just continue trading bearish, violating our internal strong low in order to facilitate a new bearish 4-hour external break. So going into this particular trading day, I had obtained a bullish bias from my 4-hour time frame, and I understood that that bullish bias was a counter 4-hour trend bias as I was looking to trade in line with the 4-hour pullback phase that was currently taking place, hoping again to see a deeper mitigation of this daily supply zone. Now from the 4-hour time frame, I had dropped down to my 1-hour time frame just to see if there were any potential POIs that I could potentially trade from. And the one that really stood out to me was this 1-hour inside bar demand zone in here, which sat at an Asian low liquidity pool. Now, I wasn't put off too much by the fact that this POI sat at an Asian low liquidity pool. The reason for this is because of the fact that we saw a sweep of a previous Asian low prior to this demand zone forming. Remember, POIs that sweep liquidity prior to their formation will have slightly higher probability of generating a move, especially when those POIs are well priced and allow you to trade in line with the prevailing directional bias at that particular point in time. So we saw a sweep of liquidity prior to the POI forming, and then we also had this relative equal low liquidity pool that sat just above the area. And so now this became a really nice POI for me that I was interested in. Now at this point in time, I had enough information to simply place a buy limit order on this 1-hour demand zone to trade it directly, aiming for this high in here. But I instead dropped down to my 15-minute time frame, which is the time frame I usually use to execute my trades on, just to get a better picture of what exactly this 1-hour demand zone represented and whether or not it was a trade worth taking. So if we zoom all the way out, we can see that we have our bullish 15-minute external breakout structure in here, which is obviously that 4-hour internal breakout structure that we had just looked at. We can see that at this moment in time, my 15-minute internal structure was trading bullish initially, as it was facilitating this 15-minute impulsive phase Again, I stress that the reason my ranges are so large and so wide is because of the nature of the price delivery that we had seen there on the 4-hour time frame. So on Wednesday, the 23rd of July, 2025, technically speaking, I was still trading within a bullish 15-minute impulsive phase because of the fact that my internal structure was trading bullish. However, at this point in here, I had now decided to establish my new bullish 15-minute external range using the 40 to 50% retracement rule. If I just very quickly change the settings on my Fibonacci retracement tool, we can see that we obviously had our 15-minute internal strong low, which was located here. That was the starting point of the 15-minute impulsive phase that generated that break, which is why on this particular day, I now had my 15-minute external week high, which coincided with my 15-minute internal week high. By the way, this 15-minute internal week high was established after my microstructure that was trading bullish shifted to a bearish market state in here when we saw this micro low fail to create a new micro high, roll over and get violated. So when that low was violated, that was the point at which I now established a new internal week high. And then when we saw this price action come in and satisfy that 40 to 50% retracement rule, that is when I now established my new external range. Now you'll notice that the 1-hour demand zone I ended up trading was not well priced within my new bullish 15-minute external range. However, if I pull on my Fibonacci retracement tool from the 15-minute internal strong low to the 15-minute internal week high, which obviously coincided with that new external week high, you will notice that the EQ of my internal range now meant that this 1-hour demand zone was well priced. And this is what gave me the confidence to place a buy limit order on this POI directly, because I understood that the only reason I established the external range is by means of the 40 to 50% retracement rule, and not necessarily because my internal structure had shifted from bullish to bearish to allow that. And so I placed a little bit more emphasis on the fact that the POI was well priced within the internal range, as opposed to it not being well priced within the external range. Having said that though, remember that there is absolutely no guarantee or no prerequisite for price action to first pull back into a well-priced POI before the underlying trend continues. This is just one of the things that we look out for to help identify POIs that have a higher probability of generating the continuation. But remember, price action will do whatever it wants to do at the end of the day. And if you are trading a market that is in a very aggressive prevailing trend, you won't always see a pullback to your EQ or to a well-priced area. So having identified the POI that I want to trade from, I then placed my buy limit order directly on this 1-hour demand zone at the open of the POI, making sure that I gave my stop loss enough breathing room. The reason I did this is because of the fact that we had the POI sitting at an Asian low liquidity pool. This meant that there was the possibility that this POI gets swept or even breaks down completely, even though it had swept liquidity prior to its formation, even though it was well priced within my internal range. So I placed my buy limit order at 145.950. I placed my stop loss at 145.550. And then I placed my overall take profit target at 149.185, which was essentially aiming for this 15-minute internal week high, which had now coincided with my external week high. Another thing to note is that on Wednesday, the 23rd of July, the microstructure, which was now facilitating my internal pullback, had not shifted bullish yet to signal the end of the internal pullback and the start of the continuation phase. And so by placing my buy limit order here directly on 1-hour demand, I was preemptively placing a buy limit order on this market before price action gave me confirmation that the pullback had ended and that the continuation had potentially begun. Fast forwarding price a little bit, we can see that I get triggered into the trade the following day during the Asian session on Thursday, the 24th of July, 2025, during the formation of this bearish candle. In terms of my microstructure, very quickly, this is where my last bearish microstructure break was. The reason I didn't identify this as a new bearish microstructure break is because I simply viewed my microstructure as moving in this manner here. So effectively, structure had not shifted bullish after this break of structure to signal the end of this impulsive phase and the start of the micro pullback phase. And so this is why I don't have this as a micro breaker structure. But again, if you chose to view that as an established microstructure range based off of the 40 to 50% retracement rule, then obviously this would now represent a new microstructure break for you. And this would be the high that you need to see violated to signal the end of this bearishness and the start of this new bullishness in here. Fast forwarding price again, you can see that after we get tapped into the trade, there was a little period of consolidation during the Asian session. But then as we were approaching the open of the London session, that bullishness stepped into the market really well, pushing price action higher. And then we saw a violation of what I had identified as my microstructure strong high. Again, if this was a new break of structure for you, then this would have been the point that you identify your structure shifting from bearish to bullish. Notice that the only difference here is that you are identifying the break a lot sooner. And because you identify the break a lot sooner, you are effectively following price action a lot closer. This bullish micro break of structure also helped confirm two new demand zones, which now offered potential opportunities to get involved in this bullish push if we were to see a pullback and mitigation of these POIs. Now, fast forwarding price even further to Tuesday, the 29th of July, 2025, when I got to my charts to perform my pre-market analysis. This was the point at which I decided to aggressively move my stop into profit to this price point here at 147.937. The reason I decided to move my stop into profit at this particular point was because of the fact that on the 4-hour time frame, I had seen the formation of a very strong bearish engulfing 4-hour candle as price action was now approaching my full TP target. This signaled that we could potentially be seeing some bearishness enter the market because of the presence of these demand zones that had formed during this bullish push after 1-hour demand was mitigated. And so because of the fact that I had not taken any partials on this position, because of the fact that we were so close to my full TP target being hit, and because of the possibility of seeing bearishness down towards either one of these demand zones before a potential resumption, I decided to put myself in a really good position by locking in a significant amount of profits without closing out any of my full position, just in case this was a very temporary bearish relief before price action continued higher to hit my full TP target. Now we can see that on the same day, 29 July 2025, price action actually did enter a little bit of consolidation after the formation of that bearish engulfing candle, but significantly, we weren't quite seeing a break above this high with any real conviction. This was a little bit of an indication that this bullish pressure was potentially beginning to stall and that there was potential for price action to roll over in order to possibly target some of these POIs. But even though I was seeing that consolidation on Tuesday, the 29th of July, I again was very happy with where my stop loss was because I had locked in a significant amount of profit already. And then finally, jumping to recent price action, we can see that after that period of consolidation of Tuesday, the 29th of July, the Asian session of Wednesday, the 30th of July, brought in a little bit more bearishness, which eventually ended up taking my full position out in profit at this point in here. And if I bring you guys over to my MetaTrader 5 very quickly, looking at the 4-hour time frame, you can see that this is the point where I get triggered into the trade as I trade from that 1-hour demand zone. And this is the point where my full position gets taken out in profit after price action came in and violated this micro low. And if I show you guys my 1 hour time frame very quickly here on MetaTrader 5, we can see that this is the 1 hour demand zone where I got triggered into the trade on Thursday, the 24th of July. And this is the point where I got taken out of my full position on Wednesday, the 30th of July, 2025. So just a very quick example of how I go about establishing a directional bias and how I utilize that directional bias to identify potential areas to trade from. Now, if you guys want access to the exact trading framework that I utilize to identify this opportunity and to execute this trade in the way that I did, you can follow the first link in the description of this video to get your hands on the Camelthorn FX trading plan. Definitely feel free to revisit this price action for yourself to see if there's anything you potentially would have done differently to what I did, either in terms of execution or in terms of trade management, or if you just want to have a look at how these potential opportunities present themselves in the market. As always, I appreciate you guys so much for watching, and I'll speak to you in the next one.